Good day, everyone. We're going to discuss about considering internal control. For this particular topic, we have objectives, and we will begin with describe the three primary objectives of effective internal control. Internal control, by the way, refers to any system, process, procedures that would ensure us to achieve the objectives, these three primary objectives that we are going to tackle later. Now, being effective is that something is able to achieve what it intended to be. So one example of that is, of course, the internal control. It is effective if it is able to achieve the objectives to which it is designed. So we have these three objectives in the following slide, and management has three broad objectives in designing an effective internal control system, starting with compliance with laws and regulations. We have to make sure that the internal controls, as auditors, we check that the management has internal control that would achieve this, that the client would be in accordance to the laws and regulations. Second would be that in terms of the financial statements and reports that the client would present or represent or would publish, that basically they're in compliance of all applicable financial reporting standards. And finally, efficiency or effectiveness of operations. Not only that such operations and the controls present would ensure that the goals and objectives have been met, also that the resources consumed would be the minimal or minimum in terms of the levels used, whether the resources or economic resources would be in finances or costs, whether that's time or efforts. Then second objective is to contrast management responsibilities or management's responsibilities for maintaining and reporting on internal controls with the auditor's responsibilities for understanding, testing, and reporting on internal control. So we have to differentiate the responsibilities of the parties in audit, the management, and then the auditors. Now, for the responsibilities of management, these two items basically have been tackled in a lot of courses, but you just have to revisit them here. That management must establish and maintain the entity's internal controls. And then management's design and implementation of internal controls is based on two key underlying concepts about reasonable assurance to make sure that the benefits must exceed the costs associated with having the information or processing the information. And the second would be that there would be inherent limitations. So whether we see to it that our internal controls really are effective and efficient, but there could be some limitations posed by the entity itself and the accounts involved. Overall, management has the responsibility to establish and maintain the controls or ICs, and also the design and their implementation. Now, in terms of management section 404 reporting responsibilities, we have to take note that management of all public companies are required to issue an internal control report that includes the following. So basically, these are the so-called accelerated filers of information in US, or of course, the reports in US, wherein they are required to prepare their audited reports in terms of internal control over financial reporting, knowing that internal control has a very great connection or a very great relationship with the respective companies, of course, preparation and the presentation of financial statements. So acknowledgement would be needed and the results of the annual IC assessment. By the way, if I say IC, I mean internal control. Management's assessment of internal controls would, of course, also involve evaluating the design of internal controls over financial reporting as mentioned, and also to test the operating effectiveness of those controls as to whether they really are able to, again, achieve the purposes and the goals and objectives they are intended to. Then this is an example of section 404 management report and internal control over financial reporting. wherein we can really see here that it is the management who has that responsibility with the two items mentioned a while ago for establishing and maintaining and also to design and implement those particular controls. And then the management, of course, is represented by the board of directors. The management assess the effectiveness, and then the criteria being used is cost of framework, which is what is usually being used in US, for example, the Committee of Sponsoring Organizations of the Tradeway Commission in Internal Control Integrated Framework. So based on this assessment and this framework, that the ICs present of that particular entity audited is effective. And then independent auditors have issued an audit report on our assessment of the company's internal control over financial reporting and assigned by the president as well as the chief financial officer. All right. So what about for the auditor responsibilities for understanding and see? So IC is very important with our clients or entities or the business or businesses that we are auditing as auditors. And we must assess control risk in every audit. Control risk, by the way, is the risk that in spite of having internal controls present in the entity, still the internal controls cannot detect or will not be able to detect material misstatements. Note that in auditing, material misstatements have to be checked. Then primarily concerned about controls over, again, the reliability of financial reporting, that's the first one, and also with the classes of transactions involved. So transactions are classified especially for their cycles. So those were tackled already in separate courses. Then example for sales transaction related audit objectives. So we have the audit objective in general form. So basically, these are the management assertions or representations. For example, in occurrence, that the entity or management of the entity represents or presents that recorded transactions really exist. So that is occurrence. For some, it is known as existence. And then the audit objectives would be that recorded sales are for shipments made to existing customers. So that's the specific equivalent of that in terms of sales, as well as the other audit objectives here for completeness, accuracy, posting and summarization, classification, and timing. Overall, the general form would be the format. We just have to think that they are going to be specific now in terms of transactions and the classes of transactions. One example would be sales. Purchases would be another example. In terms of auditor responsibilities on reporting or for reporting on IC, understanding is very important. So why controls are there? And then we perform tests of controls in order to check really if they are effective and efficient. So tests of controls in terms of significant account balances, material account balances, the classes of transactions or the groups of them, the disclosures and related financial statement assertions as explained a while ago. Then the third one is to explain the 5 components of the COSO internal control framework. These are the so-called interrelated components because they are very related to each other and they must be in place in order for us to be able to say and situate that IC really is effective and efficient. Control environment, as you can see, is like an umbrella. It sets the tone of the company. It is at the top because everything will follow or as much as possible or supposedly should basically follow the environment. And then these are the items under risk assessment, control activities, information and communication, and monitoring. So these are the items that are very important and to be discussed accordingly. So control environment would be talking about integrity and ethical values, how the entity would value if, for example, how employees and management and everybody in the organization would act even if no one or nobody would be looking. That's the integrity. And of course, the ethical values. Are they following the rules and principles and procedures of ethics? Is ethics very important in the organization, even without looking again? Then commitment to competence. Are they, of course, seeing to it that everybody in the organization are competent with their jobs. They have the skills, they have the training, educational background, qualifications, etc. Then board of directors and audit committee participation. So we have to take note that the board of directors, of course, is the one that would represent the management entirely, elected by the shareholders to manage overall the corporation. So they are the managers of managers. We have to take note that as a requirement, audit committee should be coming from the board of directors, but they do not perform any line functions in order to prevent the case of conflicts of interest and of course biases in terms of auditing, because the tendency, if one or a board of director is performing a line function, then it's like auditing himself, in which if we audit ourselves, of course what can happen is that we will be biased. Then control environment, as explained, would also include the management's philosophy and operating style, the points of view of the organization, and in terms of the applications. Also in terms of the HR policies and practices. So people matters and how the organization is being organized or structured. Then the second one would be the R. So in fact, our acronym could be CCRIM. One C is control environment as discussed. Then another C will be later. Second is risk assessment. So we identify the factors that will or may increase risk, because in business, again, we cannot avoid such risks. We can only minimize or manage. And then estimate the significance of the risk. We assess the likelihood of the risk occurring, how likely, what percentage of probability that it can occur or happen. And then we determine the actions necessary to manage the risk. And then another C is control activities. So what do we do in order to control the certain activities in the organization? So the first one is adequate separation of duties. For that, for the adequate separation of duties, we have to consider the CARE acronym. Custody, authorization, recording, and execution should be separated from each other. In fact, we can insert the word here, incompatible duties. Then authorization should be there, and that's proper for transactions and activities. For documents and records should be adequate. There should be adequate documentation and recording of certain transactions. What is adequate would be a case-to-case basis and based on reasonable judgment. Then physical control over assets and records should also be important. This is custody actually, who has, of course, the control of releasing the asset as well as the records. That's also separated. And then there would be a check and balance, or principles of check and balance. Whoever is performing something, there should be somebody who will evaluate. And even those who will evaluate would also be evaluated. So there would be independent works with each other and the checking of such. Then adequate separation of duties. Custody, as explained, should be separated from accounting, the recording. Authorization should be separated from the keeping or safekeeping of the assets. The execution or the operations should be separated from record keeping, and also with the IT duties in terms of our network, our IT infrastructures, and of course, those people who are in charge with the custody, the authorization, the recording, execution should also be separated from the actual users. Then another one would be the proper authorization, in which the approval policies could be general, overall, and could be specific depending on the transaction itself. For this one, adequate documents and records to make sure that this can happen, then for this, we have to ensure that the documents and records are pre-numbered consecutively, meaning to say that there is really a sequence of documents and records so that we can easily verify and check. Then it should be prepared at the time that the transaction happened. Otherwise, we will forget about them. Then designed for multiple use, of course. There are some documents and records, if not all, that can be used for several things and would be interrelated with other steps, of course, in the process. Then constructed to encourage correct preparation, because if the documents and records are not there adequately, like they are numbered, so Example, for a certain sales transaction, there should be a purchase order coming from, let's say, the customer, and then in our end as the seller, or in our client's end as seller, there would be, of course, the sales order, and that is to be approved, to be attached with the bill of lading or the shipping document for the actual delivery, to be attached with, of course, our own delivery receipt, and then also with, let's say, the billing statement now later on for the receivables, and the official receipt for the collection. So those documents are related with each other, as an example. Then in terms of physical control, as explained, this is the most important type of protective measure for safeguarding assets and records by the use of physical precautions. So example would be doors or bolts or keys. So they're very important. Rooms that are, of course, not accessible by any individual who has no authority and access to such. Then, as explained, there should be verification from independent sources, because internal control tends to change over time, and then the need would arise unless there's frequent reviews. If we review oftentimes, we don't have to independently check most of the time, since review would be sufficient. Then IC is another, or INC, another component of the interrelated components of internal control. This is in fact the CCRIM. So if we follow that acronym, but if you don't follow it, it's okay. The purpose of an accounting information and communication system, of course, is that the information will be initiated from the transaction, will be recorded and to be processed. Then transactions are to be reported to maintain accountability for related assets, because we have to make sure that certain transactions really are processed, and we can see the impact of those later on the reports and on the operations of the business, or what really happened in the operations of the business. So how can we capture such? If we have the system, information and communication. So information are gathered, processed, and basically released, and then communicated to certain user departments or users that would need such. And then finally, for part one, monitoring is also very important, because the last component, which is monitoring, the M, because we have to have ongoing and periodic assessment of the quality of internal control performance. The respective review of internal controls performances, and of course the results or the effectiveness and efficiency of operations should be checked, so that we can know as to the feedback and how we are going to improve them, or how can we improve them for the next phases of operations to really be improved along the way, to determine whether controls are operating as intended and modified when needed. So as explained, we can check if they're effective and efficient, and we can, of course, modify and improve for the next phase or part. All right, thank you for listening to part one, and please stay tuned for the second part of our discussions involving considering internal control. Thank you.